So this lecture is going to cover Chapter 4, and we're going to focus on something called activity-based costing. So we're going to spend this week just understanding the components of activity-based costing, also known as ABC, and companies that may benefit from ABC. Now, as you know, under the traditional methods that we've talked about in these previous chapters, we allocate overhead based on a predetermined rate. With job order costing, we generally look at labor, direct labor, and we will create a predetermined rate, generally speaking, based on labor cost or labor hours. When we talked about process costing, we generally will utilize machine hours as our driver for overhead, since that is most commonly the method in which processing occurs. So these are the traditional methods under job order and process costing. Here we find an example of, we'll read this, Atlas Company produces 2 abdominal fitness products, ab bench and ab coaster. The direct materials cost per unit is $40 for the ab bench, and it's $30 for the ab coaster. The direct labor cost is $12 per unit for each product. Both products require 1 direct labor hour per unit, and both products are allocated overhead costs, those predetermined rates, of $30 per unit. So as you see here with the ab bench, the materials are $40. The direct labor and overhead will be the same for both units, whereas in the ab coaster, the direct material is only $30. So our costs for the ab bench total $82. Our costs for the ab coaster total $72. So those are the methods in which we normally transfer or apply costs. Now, because of dramatic changes that have been incurred in the manufacturing industry, primarily service also, we need to come up with a new way of allocating costs. So the one way in which that has been created over the years is called ABC. Instead of using one method of allocating costs, this ABC uses various methods in allocating cost. So what we do here is we allocate the various overhead to many activity pools, and we will come up with something we call a cost driver that has the method of allocating these costs. So with activity-based costing, we've got some concepts. Activity is an event, action, transaction, or work sequence that incurs costs when producing a product or performing a service. Our cost pools, or activity cost pools, will be the overhead that's attributed to a specific activity. We're going to get into details on this. Then we talk about the drivers, the activity that has that direct cause-effect relationship with the resources that are consumed. So as we see here with the 4 steps, so the steps in activity-based costing begin with identifying and looking at various activities that are utilized for manufacturing that product. And from there, we'll assign overhead to cost pools. Then we'll identify the cost drivers that have correlations to the cost accumulated in each pool, compute the AB overhead rate for each of the pools, and then from there we'll allocate those costs to products using those overhead rates. Now, generally speaking, there is a two-step process in here. First, the overhead costs get assigned to the pools, and then from there we allocate overhead assigned to the activity cost pools to various products using cost drivers. The more complicated the process, manufacturing process, then there are going to be a lot more activities and drivers that need to be presented here. So as you see here, as it relates to our two AB bench and AB coaster, we've got the purchasing, we've got the storing, we've got the machining, and then the various supervising. So if we look here, we find out drivers based on the various activities. So number of purchase orders would be a very reasonable driver for the purchasing department. And amount of square footage would be an acceptable, what drives the cost, driver for the storing department. Then we've got the machining, which would be the driver of machine hours, and also then supervising. So from there, we first break the various activity costs. We've come up with what the drivers are, and we allocate them to the specific products. So you can look at this do-it system to make sure you're getting the answers correct here. Now, the activity-based costing is again where we classify the activities, identify the drivers, compute the overhead rate, and then we allocate those costs to specific products. So let's look here. Overhead costs get assigned directly to the appropriate activity pool. So as we look here, manufacturing, we treat that as what we call a unit level. When we're dealing with setups and purchase orders, we've got batch levels. Then the product development, we're going to make that activity a product level activity. And then as it deals with the property and plant, we're going to have that as a facility level. Cost drivers need to measure the actual consumption of the activity. Cost drivers that Atlas Company identifies and their total expected use per activity pool. So you see here the various pools, manufacturing, the setups, the ordering, the product development, and property and plant. From there, our drivers will be those, what drives the cost. So in manufacturing, machine hours are really what's utilized in the manufacturing process. So those machine hours are going to drive the cost in this particular department. Setups, number of setups, purchase ordering, number of purchase orders, product development, which products get developed, property and plant would be square footage. Then we estimate what we think the use of those specific cost drivers are going to be, as you see here, with machine hours, 50,000 machine hours, 2,000 setups for the setup pool. Purchase orders, we anticipate 2,500 purchase orders. Product development, we're breaking that down into two products. And then the square footage, 2,500 square feet. From there, we are going to come up with an overhead rate based on the overhead activity and the expected use of cost drivers per activity. So when we're dealing with manufacturing, dividing that by the number of machine hours, we end up with $10 per machine hour. And as you see, we break it down for each one of these pools. In allocating overhead cost, it's important to know the expected use of the drivers for each product. Because of its low volume and the high number of components, the coaster requires more setups and purchase orders than the AB bench. So as you see here, the coaster, we've got 20,000 per the product. The AB bench, we've got 30,000 in cost per the the product. Then with setups, you see the Ab Coaster has a lot more setups than the Ab Bench has. The ordering, we've got a lot more Ab Coasters, maybe because they're cheaper, than we do for the Ab Bench. One development, and it looks like the Ab Coaster has more utilization of the square footage than we do with the Ab Bench. Next, after we do that, we're going to allocate those costs by the number of drivers per product. So you see here our activity overhead rates of manufacturing, $10. With setups, they're $50. With the purchase ordering, $20 per purchase order. Product development is a flat $100,000, and then so much per square footage gives us the amount of costs that get allocated per unit that's being produced. So in this scenario, when we take this Ab Bench and we break down our various costs, we're really having an overhead per unit of $18.40. As we're dealing with the Ab Coaster, we have allocated $18.40 per unit. From there, what we do is compute what we expect the drivers to be times that overhead rate we've computed to come up with our allocated costs. From there, we're going to see the differences in how overhead gets assigned. As you see here, the Ab Bench was what we had as our cost, and then what we determined it to be for the activity-based costing versus the traditional costing. You see here in traditional costing, it was overstated by $11.60, which means that possibly we were trying to sell our product for something greater than what we possibly should have because of how we were assigning costs to each of the units. With the Ab Coaster, look how scary this is. Under traditional costing, we were only saying each item was $72. When we were using the activity-based costing to become much more thorough and specific, our true cost on this Ab Coaster is really $130 per unit. So probably we were really underpricing the sales price of the Ab Coaster and possibly overpricing the Ab Bench. So I want you to look at these duets and work those. You can stop this slide so you can see these true results here. What I'd like to do, though, is go over some problems that are going to be similar to these duets. So what I'd like to do is take a minute from here and let's take some problems. So as we go over here, let's look at exercise 4.1. Exercise 4.1 says that Saddle Inc. has two types of handbags, custom and standard. The controller has decided to use a plant-wide overhead rate based on direct labor costs. The president has heard of ABC costing and wants to see how the results would differ if this system was used. So our two pools were developed, the machining pool and the machine setup pool. Presented below is information related to the operations of the company. As you see here, the total estimated overhead costs are $240,000. From that, overhead cost allocated to the machining activity pool is $140,000, and $100,000 is allocated to the machine setup activity cost pool. So what we're supposed to do is look at and compute the overhead rate using the traditional system. So as we pull this up here, if we use the traditional system, then what we'll do is, in the traditional system, what we'll do is take the $240,000 that we know were the, the $240,000 were the overhead costs. We're going to divide that by the $150,000 direct labor costs. As you see, for the standard and the custom combined, they're $150. So the $240 divided by that $150 means that the predetermined overhead rate should be 160% of direct labor costs. So under A, using the traditional method, we are going to take the traditional approach and show our overhead rate should be 160% of the direct labor costs. Now, the next piece that we want to do is decide what the pools should be and what the drivers and the estimated costs. Compute the overhead rates using activity-based costing system. So we have two pools, the machining and the machine setup pools. So getting back here, we'll have the cost drivers of machining will be the machine hours. The machine setup, our drivers will be the setup hours. It gives us our estimated overhead of 140 and of 100 to help us determine then that the machining is 140,000 of estimated overhead divided by the machine hours ultimately gives us $70 per machine hour. Then as we deal with machine setup, if we've got between the custom and the standard 500 hours of machine setup, we will take $200 per setup hour to help us determine our overhead rates. So with traditional costing, we would have assigned to the standard item 80,000. For the custom item, we would be assigning 160,000. Now, by handling this, determine the difference in allocation between the two approaches. So under the traditional approach, as I just said, the amounts assigned to each item would be 80,000 for standard, 160 for custom. Now through activity-based, you can see here that the standard would be at 90, where the custom would be at 150. So it does change it somewhat here. Something important to know is this activity-based costing can be fairly expensive to implement, and so there really needs to be a trade-off that the benefit needs to definitely outweigh the cost in setting this up, and this is a fairly expensive approach in costing methods. Let's go to E42 and work on this one. Ayala Inc. has conducted the following analysis related to its product lines using a traditional costing system and an activity-based system. Both the traditional and activity-based systems include direct materials and direct labor costs. So you see our different products. Product 540X has revenues of $180. The total cost using traditional is $55,000. Using ABC is $50. Product 137Y is significantly different. The revenues of $160, but doing the traditional method, the costs are $50. Using ABC, they're at $35,000. And again, product 249S, revenues of $70,000. Under the traditional method, we've got costs of $15. Under ABC, the cost should be $35. So you can see that we've probably really underpriced in the sales, or the price we should have sold this product for has been very much understated. We're probably losing a lot of money on this particular product line. For each product line, compute operating income using the traditional costing system. So as we see here, we'll go here and notice that under this system, we've got sales under product 540 of 180. The cost of 55 give us our operating income on this product alone of 125. The product 137Y, 160 in sales, 50 in costs, give us an operating income of 110. And then the product 249S provides us with sales of 70, costs of 15 with an operating income of 55. Now where the problem arises is when we go and change that system, we have some significant challenges here. Under product 540X, we have an operating income of 130. Product 137Y, using the activity-based system, we have an operating income of 125. But here's where we can have conflict with the product 249S. We have operating income of 35,000. For C, it says using the following formula, compute the percentage difference in operating income for each of the product lines of Ayala, operating income of ABC minus the operating income of traditional cost, divided by the operating income of traditional cost, allows us to see the percent differences. So again, we can go in here and see that the variance here was 4% with product 540X. The product 137Y had a 13% variance, but our product 249S is a negative 36% difference, which can dramatically affect production. And the company has an unrealistic view of what the cost should be for a product, and therefore is undercharging the sales. Next, in D, provide a rationale as to why the costs for product 540X are approximately the same using either traditional or activity-based, because that first product really didn't change that much. Probably they're similar because the cost drivers are the same. So they based it on a unit volume concept, which is the same for ABC and the same for traditional based.